Good afternoon, folks. Today we're going to talk a little bit about LLC. I know the last time I did the webinar, we did talk about different formation structures. We wanted to dive deeper into LLC, the chameleon, and how you can have different faces as an LLC. So let's dive right in. So about our firm and our CEO, our firm has been around more than 25 plus years now, and our team speaks more than 10 plus languages, serving 10,000 clients worldwide. And Ying Sa is our CEO, managing partner, served on the National Taxpayer Advocacy Panel for the IRS. And she's got a book out and another book out coming. But this first book that was out, you can find on Amazon, Starting Up a Business. And the second book, I believe, is Growing Your Business and Developing Your Business. So look out for more information to come. And the second book will be Appointment with Ying at 10 a.m. And I believe the third book will be at 2 p.m. and 6 p.m. And it goes through the whole business cycle. And we tied it with our date and the different appointment times that Ying has with our clients. So no responsibility disclaimer, something that I have to read. Community CPA, as part of our services to our valued clients, are providing these seminars in order for businesses to cope with the pandemic and beyond. We are not responsible for any damages the attendees may suffer as a result of following any of the advice or information provided. So just remember, this is for entertainment purposes only. We want you to do your own homework and research and consult a professional at all times. Although we are doing our very best to stay informed, the current situation is very dynamic, always changing, always fluid, and the information could change at any time without any notice. And our information and advice are not legal in any nature, right? And should not be construed as such. So please consult your legal counsel if you should need any legal advice. LLC. Let's get started. I have a partner. What does this mean? So when you have a partner, you can't do a lot of things that you normally could if you're doing things on your own, right? So you can't make decisions on your own because you have a partner. You have to talk to your partner, make sure you get that buy-in, and so you can move forward. You have to split your profit with your partner. And a lot of times, my partner is responsible to debt, right? Liabilities, and you share those liabilities. And this is just a casual way of referring to different things. It does not necessarily tell you what type of entity your LLC is or your business is. So let's go into more detail about having a partner, what it may look like, the different types of partnerships. So there's the general partnership, right? It's composed of general partners who are personally liable for partnership debts. Limited partnerships, formed under state limited partnership law and composed of at least one general partner and one or more limited partners whose personal liability for partnership debts is limited to the amount of money or other property that the partner contributed or is required to contribute to the partnership. Then there's the two other, limited liability partnership and limited liability company. These are the two that people are most familiar with, right? A partnership, limited liability partnership is a partner in which LLP isn't personally liable for the debts of the LLP or any other partner, nor is a partner liable for the acts of any other partner solely by reason of being a partner, right? Limited liability company, which is what we're going to talk about a lot today, is unlike a partnership, none of the members of an LLC are personally liable for its debts. Okay, so Can you be an LLC with one owner? Yes, and many of you are. And IRS automatically classifies LLCs with one member as disregarded entity. So what is this? This is basically you're running it like a sole prop, like a sole proprietor business. And you guys know about sole proprietor business. This is as if you never registered your business anywhere. This is you're doing your business under your social and under the tax. Okay, when we're talking about taxation, you are no different, okay, from a sole proprietor if you are a single member LLC. Okay, so that means you report your taxes for your business inside your personal taxes. As an example being a single member LLC filing Schedule C form on your 1040 personal tax return. So you've done this before, okay? And it is an easy way to get your business taxes done all in one with your personal taxes. So you don't have to file a separate tax return, pay for a separate tax return, that sort of thing. So, like we mentioned earlier, and we kind of talked a little bit about the differences, you have to remember LLC is not a partnership. Okay, both LLCs and partnerships are created by filing forms with the state. LLC does not require a general partner. Instead, it can be managed by its member or by group of managers with the other members acting as passive investors. The LLC operates according to its operating agreement, the document, which includes such things as how profits and losses are distributed inside the company, capital contributions of each members, how decisions come to be made, and the procedures for how to add new members or dealing with departing members. Okay, an LLP governing documents is a partnership agreement, okay, rather than an operating agreement. All partners can participate in running the company, or some partners can be silent partners who are simply just investors but don't participate. In general, an LLC offers better liability protection and are more flexible than partnerships. So, with that being said, we will talk more about LLCs today. Okay. Why is LLC a chameleon? Okay, and so when someone tells you they're an LLC, do you exactly know what kind of taxes they file? No, right? LLC can look and act in many different ways depending on what is called an election. And if you heard the previous session, you heard me talk about election, but LLCs are perfect to be used for election and changing how you could be taxed, right? If you're one owner, right, automatically, what are you? A Schedule C, a sole proprietor, the one member, single member LLC I talked about earlier. Now, if you bring in another person, that's a partnership, more than what? More than one, then you are automatically a partnership tax return filer. So you won't file under your personal taxes, you'll file in a jointly filed partnership taxes. Each of you will receive a K1, okay? And K1 is like your W-2 if you're a business owner, right? And that is a splitting of your profit, splitting of your losses, and you'll bring that into your personal taxes to pay additional taxes, or it'll offset your other income and possibly generate more refund for you. If you do an election, okay, from being a partnership or a Schedule C, all right, you can change it to be a C Corp or a S Corp. And we talked about the differences in our last session on entity structures. But you can change it, you can elect it to be a C Corp, okay? You can elect it to be a S Corp, right? And remember, C Corp pays its own taxes. doesn't flow anywhere unless you issue dividend. And S Corp is like a partnership. It flows through, and the profit, the losses all goes straight through and out of your business and into your personal taxes with K1, just like partnership. But remember, the difference is that S Corp, you need to run payroll, and LLC partnership returns, you don't have that requirement. So these are the different kinds of taxes you can file with election. And just one last thing before we move on to different LLC filings and tax implications. Just remember that election you can do every 5 years. That is a rule. So you changed your entity type, let's say, from your partnership return. Let's say you did your first election to be a C Corp. You got the letter, IRS told you, you're now a C Corp, all is well. Next year, you realize, oh, I want to be an S Corp. Well, you just have to remember, you have to wait 5 years in order to change that entity now from a C Corp to an S Corp. Just keep that in mind. A lot of times we get this question, we get people saying, hey, I got rejected, I don't know why, and so this is the reason, okay? So earlier, we talked about Ying's book, and in Ying's book, Ying talks about this little story about Leo and Francis. And the one color of the chameleon, is the way, okay, different members of LLCs get taxed, okay? And the story of Leo and Francis is about a real estate business that flips houses. And one is the person who sweat, who worked hard for the business, while the other does not, and is considered like a passive, okay, investor, passive member of the business. So you have to remember Francis, for those of you that read the book, is the person who did the active working, the flipping, and the business. So he gets taxed on both income tax and self-employment tax, okay? But Leo, the passive member, the investor, only pays income tax. And this can be spelled out in the operating agreement. So this is what really sets LLCs apart and kind of can work to your advantage as you think about how LLCs can benefit you and your particular situation and you and your partner, and depending on how you guys work together, there can be made special arrangements in the operating agreement. So in another situation, there's a husband and wife, they have a deal. They're owners of hotels. Okay, Sneha, who does not ever go to the hotel or work in the hotel, can save self-employment tax since she is not active in the business. She checks the bank account, make sure, make sure the money is there, all right? But it's not interfering or doing anything for the business, okay? So Sneha's profit will be treated as investment income, while James, K1, he is the person that goes to the hotel, he's the person that talks to the managers, he is the person that gets things done, deals with complaints, that sort of thing. And his portion, he'll have to pay, the income tax and self-employment tax. Just another example of how you can visualize owning an LLC and operating as an LLC, okay? So to recap, the LLC is a chameleon because of your entity and how your tax can be different depending on what type of entity structure you choose to be as an LLC. And you can do that, like I mentioned, through election, and you can do that to best benefit your situation, okay? And the operating agreement, you can alter different components in many ways that is most fitting and beneficial for you and your partner, so it can serve all the people in it and to fit their situation. So this is why people like being an LLC, people choose to be an LLC, and wanted to have this session to just kind of go through the minds of those that are thinking about starting a new business and not sure where to start. LLC is a great place to start, and has a lot of flexible options for you, and that can be altered to best fit your need. So that's a lot of the things that we wanted to cover today. We'll talk a little bit about different structures in the near future, but continue to stay tuned and come in and learn from our webinars. You can visit us on our website, www.communitycpa.com. Email Catherine and call our office to see if you want to get an appointment set up with us. We'll be more than happy to talk with you, discuss these different options with you. We have a legal division and can consult you in your needs. So we appreciate you tuning in today, and we look forward to serving you and seeing you in the near future. So hope you guys have a good rest of your Tuesday, and we'll talk again soon. Take care.